Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for almost pitchers and catchers reporting, which is slightly non-technical information. Most of the pitchers and catchers are reporting on Friday the 14th. This is going to be the market preview for the session of Thursday, February 13th, 2014. So we are going to talk about a lot of specifically technical things today, and we're going to highlight one technical feature, which is the contra candle, and we're going to talk about that in detail in just a little bit. Let's just kind of run through what we're seeing here on the top line. The averages were for the most part better today. The ES was higher on the day. The Nasdaq was higher on the day. The Dow did close down on the day. That was the only major that wasn't positive on the day. Advanced declines on New York were just barely okay at plus 400 issues. Nasdaq wasn't even plus 200 issues, so that was a real stinker. And the New York trend closed at 1.34, and they wasted a decline in the VIX of of about 21 cents without really having much to show for it on the upside. So the market internally was not very strong, and the price action was, well, let's just say it left a lot to be desired, and we're going to talk about that specifically. Let's move on and take a look at the Dow first, because that's the weaker of the three right now. All right, so here's a look at the Dow. The Dow is trying to move higher here. We're 3 days up, and a lot of times after 3 days up, you start to get some selling. They took it a little bit higher. They swept it over the previous day's high, but you can see that we did settle lower on the day, and we're certainly well below the 50 DMA still. So it didn't really take a shot at that. We are technically short-term positive, being above the 10 EMA, but this 50 DMA has been lost, and they haven't really even been able to re-challenge it yet. If we do continue to the upside tomorrow, that's going to be the level to watch. That 50 DMA. If we get up above that, the 4-ace level. To the downside, the 10 EMA is perfect because it lines up with the previous day's low and is also our key moving average. So that's a slam dunk there for your downside level to watch for tomorrow. Here's a look at the ES futures. The ES futures were higher on the day, but we did have this contra candle setup. And let's talk about this setup. We have an updated previous day. That's candle number 3 here in the seeker setup phase. Today's an up candle, but today's candle closed below the day's open. So that's actually a sign of distribution, because the sellers actually won the bar. The bidders opened trading at level X, took it up a little bit higher, fell back down, brought it back up a little bit, but were not able to reclaim the prices that they were paying when they rang the opening bell this morning, meaning that the people that were selling stock overwhelmed the demand in the market. That's a key thing here. When these happen at mid-range, they're always notable, especially after a good move. We've had a good move here. We've moved from the 4-ace level all the way back up above the 50 DMA and are again challenging this breakdown area. This is the area that we had this congestion in, and we broke down from that. Now we're leaving a candle up here. All these other white candles were reasonably strong. We had a nice pivot candle here to the upside. We had follow through on candle 1. Candle 2, you can see, was just a small day, but maintained the upper half of the trading range of candle 1 here. That makes it more or less a measuring day where the bulls and bears are just measuring each other off. But you can see that this close is clearly well above the day's open. So the buyers overwhelmed the sellers there. The next day, what happened? They went out bidding for stock at the market, took the market higher. But today's candle is very different. They gapped it up. They weren't able to really overwhelm the sellers, so you can see that there's some stock for sale up in this area. So that's definitely a key thing to take away from this. So levels to the upside to watch are going to be the previous high at the 7/8 level. To the downside, we're going to have intermediate support at the 50 DMA, and then better support at the previous day's low. The 6/8 level, 1812.50, is going to be very strong intraday. Now we're going to take a look at the NQ futures. The NQs actually made a new high on the move here. You can see we plumbed a new high on the move here, exceeding the previous high. Not only that, what did we do here? We actually closed and settled at a new high on the contract. So this is a notable development. People are saying, okay, we closed a new high. Isn't this great? It's great except for one thing. What's the one thing? It's a contra candle. We settle below the day's open. Now this is it's notable when it happens at mid-range, but it's especially important when it happens at range high. A lot of times bull markets die when there's an update that settles below the day's open. Same thing with the bomb. A lot of bombs are formed when you have that down day where you actually settle lower on the day but above the day's open, still leaving a gap on the chart. But right now we've got a clear indication here that the buyers are starting to show some fatigue, and we're starting to get a little bit long in the tooth here on this push to the upside. So these contra candles are always a cause for concern. This one back here was actually an up close. This settlement is above the day's open. This was, I believe, not a contra candle, but this one is a contra candle, and you can see what can happen when you have these type of days. All right, so levels to watch. We've got a scale here. Okay, so obviously the previous day's high, since we're making new highs here, are going to be important. The next level is going to be the 7/8 level. To the downside, we're going to have some minor support at the 6/8 level, and then a little bit more important support here at the previous day's low. And then we start talking about some more important support here and some more meaningful support when we get down towards that 50 DMA. But the key takeaway here is we do have contra candles in place on the ES and the YM. On the ES and the NQs, I'm sorry, we do not have it present in the YM as we looked at first. We looked at the cash Dow, but the Dow futures also closed lower on the day. So we do have the condition in the ES and the NQs. So definitely be prepared for kind of a stealth down day tomorrow, and definitely don't pass on any shorts that look like they have merit, especially if we wind up having any kind of market support for those. All right, here's a look at the multi-sector daily chart. You can see the XAU was pretty weak on the day. That was a source of funds. The banks didn't do anything today. The banks were really fairly weak. We had some good performance out of the semiconductors. They kind of picked up leadership today after kind of taking a breather the day before. And the BTK was also up and is challenging the previous high. All right, let's take a run through the individual sectors. The SOX was definitely the top gun on the day, outperforming all the other sectors. Pushing up here above the 6/8 level. This is making a new high on the move. Note that in the secret count, we're only 4 bars up. If there was one group you want to see positive, probably be the SOX in NASDAQ. So next thing we got to target is the 7/8 level to the downside. This 5/8 level is going to come into play, and then below that, we'll be talking about the 10 EMA. BTK today was up 0.4%. Which wasn't particularly spiffy. It did close above the day's open. Didn't really make a new high on the move here. As you can see, pretty much just retested that. So we have potential here for a double top, but we don't have any real jeopardy from any of the bar counts. We're not too deep in the startup phase, and we're not too deep in the exhaustion run that we have to worry about this right now. But definitely be ready for if we do start to push up above this 2/8 level. This is plus 2/8 on the Murray Math box. That's going to be extremely difficult resistance. To the downside, plus 1/8, and then the 8/8 area at 2,500 is going to come into play. Let's take a look at the transports, which are about flat on the day. Still can't reclaim and get back above that 50-period moving average, so that's still a headbanger. That's definitely going to be important for the bulls to reclaim. We're definitely working on a little bit of a pattern here. You can see reverse head and shoulders. Getting a little bit long in the tooth here. We've only got another 2 candles or so before we lose our symmetry. So if we're going to break back to the upside and take a run at this 8/8 level, they're going to have to do it within a couple of candles, or risk getting too long in the tooth here and just having this whole pattern unravel. BKX was down a little bit on the day. They took a shot at that 4/8 level and got rejected. This again has that same look. They've really got to get this going, and this needs to get going back to the upside. If this rolls back down again, this is just going to be the little retest wave, and that's going to be extremely bearish for the overall market. Oil services, unfortunately, were also fairly weak. They closed down on the day. Still gaming this 200 DMA. 200 DMA tends to be gamed longer than anything else, so we could see this for another day. If we release to the upside here, we're going to have resistance at the 50 DMA and support at the 0/8 level. XAU was the last laggard on the day, taking a little bit of a break, and we've got a bit of a king and queen setup here. It's not range high, but it is in the area of this 8/8 candle, of the 8/8 level on the Murray Math box. So if we kind of recoup and start to pivot back to the upside, this 100 level is going to be pretty key resistance. To the downside, we're going to have pretty good support here at the 6/8 level. There's a lot of things converging. We've got the static trend line, we've got the 200 DMA, and also the 10 EMA. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.